We need to talk about Tesla bull and bear debate. We should talk about a country raising their basically their central bank rate to 81%. Yes, folks, 81%, and inflation over 104%. Can you guess which country this is? We should talk about IKEA planning to spend $2 billion. And of course, we will talk about some leading economic indicators. Folks, this is the daily financial news for Friday, April 21st. This is what I was reading. First and foremost, we will go to Argentina. Argentina's central bank has raised their Fed fund rate, if you will, to 81%. The country is currently seeing 104% inflation. Can you believe that? 104%. It looks like their banks are apparently doing what is called a bail-in. A bail-in essentially means that the bank is leveraging customer deposits, specifically US dollars, and that is becoming an issue. We should expect some more pain coming from Argentina. It looks like investors in the country are actively trying to dollarize assets quickly, fearing a currency devaluation. On top of that, we can talk about IKEA. It looks like IKEA is planning on spending, he tried to say early in the morning, about $2 billion on growing their footprint in the United States over the next 5 years. Chris Waitling, chief executive of Longview Economics, came out and basically said we are starting to see some brutally bad leading economic indicators. Again, these are things that I'm seeing and reading about as well. I do fear, again, I've said before that the May 3rd Fed meeting is unfortunately horrible timing. We won't see the real impact from Silicon Valley Bank until probably the middle of May. Sorry, fighting off a sneeze here. On top of that, we had some clear earnings on Friday. We had CSX, you could think transportation and railways, beat top line, beat bottom line. Procter & Gamble actually beat top line, beat bottom line, raised guidance. But when you look at the numbers, it was actually because they had higher prices, but they did have lower demand. Specifically, prices were up roughly 10%, but unit volume was down 3%. So pretty interesting to see Procter & Gamble with their unit volume down. But again, they beat top line, beat bottom line because of raised prices. AT&T basically missed on revenue, but beat on earnings. Again, their stock was hit pretty hard on Friday, I believe. Let's talk about Tesla. I don't know if you guys saw this, but it looks like Cathie Wood has come out with her thesis that Tesla is going to $2,000. There is a bear, David Trainer, founder and CEO of New Constructs. He actually has a price target on Tesla of $28. Yes, folks, $28. IMF chief economist no longer worried about a wage spiral inflation. That is something that is important. That is kind of the third leg of inflation. Remember, we had goods inflation, housing inflation, and obviously services. So it is interesting to see that. On back to the earnings, we also got Blackstone. Blackstone cut its dividend 10%. Blackstone is talking to various regional banks to help them with loan constraints, specifically around car loans and home improvement loans. Blackstone's book, their loans, if you will, is estimated to be about 2% in office, down a whopping from 61% in 2007. So they have clearly moved their loan book away from office over the last 15, 16 years. Rick Palacios Jr. from John Burns Real Estate Consultant, a great follow on Twitter, talks about interest rates being sub 5% for builders, and that is why builders are gaining market share. Existing home sellers, they don't have that luxury, at least not most of them, but builders do, right? So again, in interest rates are, say, 6.75. They aren't for builders. Builders are routinely buying rates down to 4.99 to 5.5%. So again, builders are doing quite well in this. And of course, on Friday, I would be remiss if I didn't say that was the first day I read about Biden's administration's desire to penalize folks with good credit and kind of reward folks with bad credit. I did read this Friday morning, but it just felt like such a bad idea that maybe I wasn't reading what was actually going on. And if you saw my Sunday financial news, you know that I came out and just blasted it because I don't think it's just bad policy. It's just bad policy. So I did read that on Friday, but I wanted to verify it more because it felt so wrong. But alas, it is true. And then anything else I want to highlight here? Again, I got 2 pages of notes. No, I think that's it. All right, folks, that's what I had for Friday, April 21st. I will go ahead and record Saturday, April 22nd shortly. Thank you so much.